morning. We are live, and I just noticed there it is right there. I've got to update my StreamYard subscription. I was thinking of changing products, and I guess my time is so ignore. It's always opposite. Ignore that. But today's stream is sponsored by StreamYard, I guess. Good morning, everybody. It's a Tuesday. We're gonna call Uptober, and because we're doing okay today. And who's all here today? We've got a few people watching, a few people joining in. Welcome. And Abigail first. Good morning, Abby. Abby or Abigail? What do you prefer to go by? I guess Abigail. Welcome to the live stream. Got a little bit to talk about today. Market's looking decent, which is nice so far. Again, we know what things are like. It could definitely change in the next half an hour as we are live streaming. But as people roll in, make sure you say hi. Make sure you do like the stream as always. And either is good from Abigail. Let's go with Abigail. That sounds good. More formal. I've got my coffee. Hopefully you've got your coffee. I've got a drip of coffee on the side of the mug. But that's good. And somebody asked and was wondering how I drink my coffee. It's just black. I do typically just have it black, French press in the morning. So there we go. I've got a little bit of news to share. Basically, looking at the market, and this article. Before we get into the news, so I just wanted to jump on. I had a little notification on my YouTube this morning that the channel has hit 75,000 views, which is awesome. So thanks to everybody who watches and follows along the channel. All the views help, which is great. So the channel's growing, having fun, and Nadia is here as well. Hey, Nadia. Welcome. I gotta remember to change hands because the camera's reversed with the thing. Hello, good morning. So it's not out of screen. But yeah, that's the channel news. I will do I didn't get a chance yesterday to do work. Really got away from me. It was busy yesterday, which is always a good thing. If you're working and making money, that means you can invest down the road once you get paid. But work got away from me, so I didn't have a chance to film a portfolio update. I will do one this week, I promise, as always. So if today's looking green, it should be another decent day to do it. That being said, I did do a purchase this morning. I was looking at all the different allocations of my portfolio, and as you know, if you've been watching, I like to keep my the BTC.Y, like the Bitcoin in the digital currency ETF. I like to want to try and keep that around 5% of my investment portfolio, and it had dropped a little bit down, so I did do a deposit for that. So I will share that on my community tab. So I did purchase some shares of BTC.Y to kind of bump that up to just about 5%, and I'll share that on the community tab. But I'll also go over that when we do the update on the channel. So everything is looking decent today, which is nice. It's nice to wake up and check everything and see the green. The green numbers instead of red numbers, that's for sure. So hopefully if you haven't checked your portfolio, you probably have a little bit of green in there, which is nice. But let's just pull in some news. I just had one article to share today. So if anybody else has anything that's on their mind, feel free to ask it, put it out in the chat. We're always here to have a discussion on that. So let me just share one article which I found interesting. So let's get this into the chat. There we go. This was on Yahoo Finance. This is a Canadians. So Canadian investors pulled $9 billion from mutual funds in September, which was quite a staggering amount, actually. So obviously people are needing their investments. Either they're needing their investment for something else. Obviously, with everything being more expensive, you might need some money. But again, also too, with the way the market's being, if people are taking it out because they're worried about the prices, it's always not a great idea to take it out if it's a long term. If it's if you're putting something into a mutual fund, I kind of consider it. I would think it would be more of a long term investment, and you probably shouldn't take it out. You should just carry on with your regular dollar cost averaging deposits. Mutual funds like that are something typically. I mean, I had mutual funds when I had my investments with the bank in my RSP. and it would just go right to the deposit. You wouldn't necessarily pay attention. But I guess if people are maybe having to dip into their RSP, now the article doesn't mention. It didn't mention if it was like what kind of where they were obviously held, or whether RSPs or TFSAs. It must be everything combined. Even with unregistered. But that was the second biggest loss, like net loss since June. So 10.4 billion in June. So there's been outflows apparently coming since April. I guess basically since the market has been dropping, which is kind of the worst time to redeem and sell things. I think. Again, that's everybody is different, how they perceive what they want to do with the market. So, but one thing that was what has been is ETFs are, I guess, a bit more popular. So maybe people are taking them out of mutual funds into ETFs, and the ETFs net sales, there was a 1.8 billion in September, with investors flocking to fixed income and money market ETFs. So there we are. If you follow my channel, obviously I haven't sold anything, but obviously a lot of people are, because they're worried with the market. I think maybe with the big drop in September, like if the quarterly, people would have gotten their last quarterly statements probably in the, they'll get those in the mail, or they'll look at their quarterly reports and go, oh my gosh, it's down. And I guess that's what people do, is they panic, and they panic and pull everything out because they're worried about it. But as we're seeing in the last few days, couple weeks, we're seeing things start to kind of come up again. So if you had stayed in there and just did your regular dollar cost averaging deposits on your investments that you've chosen, you're probably starting to gain those a little bit back. Which, as you look at things, and I'll look at my portfolio, over the course, and it's starting to slowly kind of come up again. That's partly from making more deposits, obviously, but if you're buying in, your dollar cost averaging down. So as the value goes up, you're coming out slowly, stepping forward instead of taking steps back. Also, too, if you're withdrawing from your investments in mutual funds, even though like, for example, BTC.Y pays the monthly dividends, we'll talk about ETFs, but if your portfolio, if the investment value is down, but you're still making dividends that you can reinvest into that, it's good. Whereas if I was to, if you're to panic and all of a sudden take that out and just keep it in cash, it's not really doing anything for you. I mean, unless you're putting it into, high interest savings account. But I have a feeling people that are maybe panicking a little bit are taking it out because they need it for other things, and not necessarily other investments, which is tough, right? So you're losing out on all the gains from dividends and appreciation in the meantime, which is sad. It's like locking in. I guess kind of. Maybe kind of explain. I guess, people. Yeah, I guess kind of like that. People like to know what they have, right? Where is if it's sitting in an investment, it's, especially right now, right? It's like it's up and down, mostly down. So some people kind of like to take that, have the, like, sleep better at night knowing that, what, it's not going to change anymore. I've lost, I'm down on this, but I'm just going to take it. I'll put it into a savings account, or maybe even a GIC or something like that, so they know how much they're going to be making on that. The thing with GICs right now too is they're paying a decent return. This is like, we haven't seen GIC returns like this for, what is it, 10, 15 years or more. I typically don't like locking necessarily. I don't have GICs. I've looked at them, but I don't necessarily like locking things in as much, because the thing with the GIC, a lot of them, you have to really research them, because some of them you can cash flow. There's a whole bunch of different types. But if you're locking something in for 5 years, you might not, if you have to cash that in. And this is the thing, like, if you've cashed in, if it's a long-term investment, say for example, to go back to mutual funds in your portfolio, it's a long-term investment that you were planning for 10 years or more for retirement, and you wasn't cashing that in, you're losing out those gains. It would be the same if you're in a GIC and you're putting that in, and all of a sudden you need to redeem it. If it's not a redeemable one, you can get your money back, but you might not make any interest on it. But that's a good point, Nadia. I mean, some people, if this is the thing, if you sleep better at night having your money in just a savings account and knowing that you're going to be making X amount of dollars with interest, that's okay. There's nothing wrong. There's nothing wrong with that. Investing in the market isn't for everybody. That's for sure. Especially now, because it's very volatile out there. It definitely takes a calm demeanor and calm head, because if you're looking at things, it's been pretty bad out there. But again, if we're looking back and if you were a very conservative investor, and you like, the conservative portfolio is like 60%, 60% equities, 40% bonds, your portfolio is down as much or more as if you were all in equities, probably almost more, I think. So it's hard. Or if someone, like, this is what's hard, if someone's older, and obviously everybody thought, okay, bonds are all the safe, these are all the safe investment, they're down quite substantially. Like I have my RSP in Wealthsimple Invest, and it's in a small portion of, because you have to, the way it works is you can't necessarily go with a Wealthsimple Invest, you can't go all equity. I have like a very small portion bonds, but if I go in and look at the account, the bonds are down like 23% or something like that. So the portfolio is actually doing quite well, considering it's not down 23%. So yeah, it's tough. If I was in more bonds, I'd be in worse shape. But I switched all that, gosh, like about a year ago. I think if I think back, I kind of go over my other investments. Obviously, I'm looking at the TFSA all the time, but my other investments, like my RSP that I have on the invest side, I typically kind of look at that more like once a year, kind of come the new year, when I have to see if I can benefit from any extra deposit or anything, if I'm able to, for my RSP. And MC, welcome back to the show. Yeah, the laddering strategy, it definitely works. So for people that don't know, you would basically take, for example, let's just call it to make things easy, we'll call it $5,000, and then what you would ladder into would be like you would divide it equally between that. So you put $1,000 in like a 5-year, 4, 3, 2, 1, and then as the first ones mature, you roll that into the longer term. So it kind of just keeps rolling, and that way, if you do need kind of something short term, and your maturity of your GIC comes up, you wouldn't necessarily invest it all into the next a longer term again. You could take some of that and use it, so you wouldn't lose out as much. And I know some of the shorter terms, like if you're laddering it, you could keep some shorter terms in a cashable GIC or something like that. We wouldn't lose out on the shorter terms. But the way the yields and everything are right now, some of the shorter terms are paying quite very similar, right? But good point for GICs. And okay, that makes sense if you were to call them. Yeah, that makes sense. I mean, 10% is such a small. I guess I kind of, mine are in 10% if I remember correctly, and I guess you could call in. I think it depends on how you set up your initial questions, maybe too, and probably the amounts you have in your total portfolio. There's probably a whole bunch of things, but I'm sure if you call, you could probably do that, and they can adjust it, because I know they can probably set up even custom. I know they can even set up like custom portfolios, because that's kind of what they did for the Wealthsimple Venture Fund. It was set up as a custom one, which goes into the purpose cash fund for now. But 10% is okay. It doesn't, if you look at it in terms of if you're doing regular deposits, you have to kind of think, well, it's not necessarily bad to have, because don't forget also with that component, they have it's bonds. It's typically the if I remember correctly, it's ZFL, which is the BMO long Canadian long bond or something like that. If you're in a smaller percentage. I think if you have a larger percentage in bonds and fixed income, the ETFs might be a bit more diversified. You'd have to definitely check that out. But it also holds cash, a little bit of cash in there. Obviously, there's always cash in the portfolio because dividends come in and that kind of thing. And it doesn't always invest like the exact dollar amount that you make it as an auto deposit, but it also has there's a gold ETF as well. So you're putting a little bit of diversification in there, but I don't necessarily think the 10% makes a huge, isn't necessarily going to make a huge difference in the whole grand scheme of things, to have a small portion in something else, MC. But good call if someone is interested and uses that. I do like the invest side. I mean, it's doing okay considering how the market is doing. It doesn't. I mean, obviously it's down for the year, but it's good for definitely good for new investors, and it's good for like people that, I don't want to say don't pay attention, but you don't have to necessarily pay as much attention. It's very easy to set up on autopilot, right? You can set that up on the regular one, but if you have auto deposits coming into your Wealthsimple trade, you have to physically go in and make the decision to make a trade. It won't add, for example, you put in $50 a week and you want it to go to VFV. It won't do that for you. It would be nice if they did have that feature to kind of dollar cost average, every Monday put in $50 and puts it in, but it doesn't do that. It's definitely self-managed, but I guess that's part of the product and it's also because it's free, right? Free to trade. So you can't necessarily blame them for not having certain features. And they kind of, I think, want to steer people into their, over into their invest side that want to do more autopilot stuff. But it does okay. The deposits come out always on time, and it gets split up, very diversified. There's lots of choices in terms of styles of your investment that you can choose. So I've been happy with it. Definitely, it's the allocations and stuff, like considering the overall market for me, it's been holding up great for considering what it's like out there. But good point. I don't know if anybody's watching if they've done that on the invest side, done like heavy into equities. I think if you're going to go all full equities, you might as well just kind of you get to that point, you almost kind of will do it yourself, because I think as you kind of probably know a bit more, are a bit more comfortable investing, to have that potential risk, right? Yeah, but great question and great comments. I love these. You always kind of learn something. And MC, do you do the GIC? Do you do the GIC thing? You read more and more people are kind of talking about GICs now, because all of a sudden they're paying, almost 5%, for a 4-year, 5-year GIC. So it's kind of like, coming from looking back we haven't seen them for so long like that. Used to pay next to nothing for GIC. So might not be a bad thing to kind of take that and kind of know what you're going to get. Because I think rates are going to be probably, I mean, you never say never, but I don't think we're going to see the low rates that we had before, low rates for borrowing, for a while anyways. Never say never, you never know, right? But I think we're in for higher rates for the next little bit. And let's just pull up. I can unshare that. Yeah, everything is doing decent today. I'll pull up. I'm kind of happy now. The one stock that's done okay for me that I just bought was Tesla, and I bought the CDR, so that's up. Now in hindsight, I wish I would have bought more yesterday, but hey, it's okay. Just started off in that position, so I think that was good. It's up today, which is nice. There's been a few people that I think have Tesla on the channel. I know Candace does. She said she was down on it in her investment, but I don't know if Vic's here, but Vic has, I think, the CDR as well of that. I like yeah, that's kind of what I got into. It's kind of a good dollar amount. It's Canadian, so it's hedged, and it's kind of easy. I think this will be easy to kind of average into. So happy about that, which is nice. So that's a good start to the day. And there was another article, and where did it go here? I start reading them, I save them, and then I always close the tabs off when I start the live stream, and I always forget that and then things always move so quickly that the articles always disappear, which is annoying. No, I think we covered it. No, that's it. We covered it. I think the one thing that I guess we have to look forward to tomorrow, and I'll get to this, Mike. That would have what I can say because MC. So you don't do that. But ahead of retirement, you cash out for short term. Yeah, I think definitely that's the way to go. I think a lot of people heading into retirement were heavily in. This is unfortunate. Like we're heavy into like bonds and stuff, where those have like really come down this year, right? So if everything was in bonds in your portfolio as a retiree, it's like oof, you feel bad. But I think one thing, yeah, to look in the future is probably potentially to look at GICs and do it that way. Yeah, yeah. It's not see, and it's also. I mean, if you're starting out, I mean, I don't know how old you are. If you're just starting out, that's awesome. And of course, um, you'll see it start to snowball. Which I'm starting to. I'm just kind of starting to see. Obviously, my portfolio MC is down, just like pretty much everybody else's. But you kind of start to see the snowball effect of the dividends coming through, whether they're monthly or the ones that pay quarterly. So you are starting to see that snowball, and also if you're continually slowly adding to it, you're also getting that growth as well. That just slowly builds. But then when you start to see now, once you start to see the dividends start to roll in, it starts to really add up. Like I can pull up my my spreadsheet. Let me just pull that up. So let me share that because it's pretty. It's kind of neat to see. It just kind of shows what you're doing is working. And let's pull this in, like for the snowball. Like these are my dividends. I share these on the channel as well, obviously. So these are the dividends. Like in September, I made $28.79, whereas the month before was August was $20. So another basically $8.60, 60-ish cents, right? So it's starting to build up almost $30 a month. But then also too, like July had the July was 33.43 because some of the dividends pay quarterly, so you obviously get a bit more of those each quarter. But it's growing. Like as we look back, if we look back, January would have been a quarterly one, like would have come through. But like February $13, March 18, and then it starts to, April would have been a quarterly, and then May 15. So it's starting to really snowball, which is neat to see as you're starting, especially when you're starting out, because it seems like you're going nowhere. Especially if you have a little smaller amount. I mean, my portfolio is still I'm very thankful I'm able to save what I have, but it's still very small in the big scheme of things, I think, for my long-term goals. But it starts to really show, I think, after a year or so, the like basically snowball effect. So let me pull up your comments so we can see them here. So short-term ladder, yeah. Yeah, that's the point. Like if you look at the yields, like getting more like I'm not super technical, but like the yield curves that's what's throwing off rates is the yield curves on these is because the shorter terms are paying as much or more than the longer term, because basically the market thinks it's gonna it's go and that's with shorter terms. Like the market thinks it's eventually rates are going to pivot and start to either pause or drop or come down again. So that's why the shorter terms are paying more, because they think in the short term it's going to switch, and then you'll be able to go back into longer terms. We'll see. But there's nothing wrong with it. Yeah, I mean, lock into a GIC for a shorter period of time if they're paying well. That's why it's also too with like the way the yield curves. If you do look at mortgage rates, if you go to the webs, if you're looking at fixed rates, shorter terms will be as high or sometimes higher than a 5-year term. It's all wonky. The market is just wonky right now. And so GIC, VEQT, VI equities. Yeah. Definitely there's pros and cons with everything. And I don't know if there's a perfect MC. I don't know if there's a perfect portfolio. I mean, I'm not a trader, so it's kind of like I don't know if there's necessarily a right or wrong way, as long as you've done your research, investing into what you are comfortable with doing in terms of volatility. And there's lots of info online. You can look at the ETF. You can look at, if you're just investing in ETFs, they're diversified already. You can get some that are basically the whole stock market diversified into an ETF. I mean, there's nothing wrong with that either. Just be comfortable in what you can, in your risk tolerance. Mine is completely different than everybody else's. I think that watches. Everybody's their own. Everybody knows themselves better, right? So if you have done research and bought something that you think is for you, then that's the way to do it. I have obviously investments in my TFSA that some people would never have in theirs. That's okay. It's all good. We're all kind of have the same goal with different, I think, paths to try and get there. And who, if we had a crystal ball, we would know who is right or wrong, but you can only kind of do what you think is right for you. Yeah. I always get slack on the channel. Well, it goes both ways. Because I have a few of the penny stocks on there, it's like fun it's gambling basically. That's what buying a stock almost basically is. But a few of those just to kind of see what happens and learn from things you buy and mistakes you make. And then I also have, obviously the Bitcoin, and it's a couple of the digital Bitcoin and Ethereum, that ETF focus more on Bitcoin. And the comments are either, you should sell everything and just keep VDY and VFV and get rid of the rest, or you should be buying more. Why don't you have, I have the Bitcoin yield ETF, and people are asking why I don't have the Ethereum yield ETF. So it's kind of like it goes both ways. Everybody's really different with what they decide to invest in, and everybody's a little different. That's for sure. But I mean, I like the yield on the Bitcoin ETF. That's kind of part of the reason I buy it. I see the long-term investment in it personally, and I'm okay with the volatility in between times. And it's such a small, with the comment that I had about you should just have BTC.Y and PFP. If the actual percentage of my portfolio between those two ETFs are basically over 50% of my portfolio is in those two ETFs. The rest is diversified roughly 5% or so in the other individual stocks. And that's kind of where I want to keep it. So it works for me at this point. But no, there's definitely no right or wrong on what you're deciding to do. And as it grows, it grows. And I guess with investing, I'm not having to cash. We talked about at the very beginning, people in Canada withdrawing 9 billion in September. out of their mutual funds. That almost kind of shows a little bit too, like people probably, it can be easy to put too much into your investments, right? Because you still want to have like ideally an emergency fund for something. You still have to be able to live day to day, and as things get more expensive, it's kind of like you don't want to don't lock too much away, because what happens this is what we're seeing right now, right? The last 20, the last basically before this year, you could put anything into an investment and it would go up. It was just, from 2020 on, it was easy. You just hit deposit and you'd make money the next day. But now it's shifted. So if you put too much into things, like, and you all of a sudden need it and you're taking it out now, you're taking the loss. So that it's kind of like, I'll use this time now. Obviously, if the portfolios are down, you kind of think, okay, well, portfolio's down, things are getting more expensive with inflation. I probably, you still want to invest, obviously, at least I do, but you might have to think and hold back a little bit into and leaving things in cash just in case for a rainy day, right? So you don't have to pull that out when it's down. That's the ideal case, especially in a TFSA, because the TFSA, you don't pay tax on the gains, but you also can't claim loss. You can't claim it on your taxes if you take a loss. So that's the unfortunate thing as well. And if it's in, for example, if you're doing a RRSP account, if you're having to take money from that, you're paying taxes on your withdrawal, withholding tax right away. So it's kind of like it's like a double whammy especially if you're taking from RRSP. Your portfolio is down, let's say 10-15%. So you've lost that, and all of a sudden you're withdrawing it again. You're paying the, depending on the amount you're taking out, up sometimes 30% withholding tax. So you're doubly hit, with that coming out. So great questions here. Yeah, Core and Explorer. That's a good way to put it, MC. That's a very good way to put it. I'm gonna use that, if you don't mind. Core and Explorer, and that's kind of where mine is. I mean, my core is VDY and VFE. So I've kind of Canadian is VDY is the Canadian S&P, basically heavily financial, oil, and some obviously telecom in there, and then the BFE is the S&P. So I'm kind of covering my equity bases there, I guess, and then the individual stocks that I do own. I have like the Telus, now Tesla. There's obviously going to be overlap between some of them, but then some of them aren't, like some of the renewables, right? Brookfield. I think there's a you can see my portfolio is leaned heavily towards. I mean, I own oil and gas in VDY, so I've kind of covered that base there. That's my kind of feeling, and not having individual oil ETFs or individual oil stocks, and I've basically diversified out of the core. We'll call it, the core. My more explore is TransAlta Renewables, Brookfield Renewables, Greenlane Renewables. So it weighs more heavily on, outside of my core, weighs heavily on renewable opportunities. But I like that term, core and explore. I have to remember that one. And broad-based ETF, small amount in a 90-10. Okay, yeah, that's okay. What ETF is it that you're in? What's the one? There's an all equity one. I can't remember the name. It was a Horizon. Is it the Horizons one? Is it XEQT? I think that is. It's hard to it's hard to remember. It's hard to remember all these all the time. Is XEQT the Horizons? Oh, that's the iShares. Yeah, core equity. There's also is that the one? There's also MC. There was also a so the XEQT is the all equity one. There was also one Vic mentioned. It was a Horizons one. I think very similar. And I guess you could probably answer it. I'm gonna assume like the all equity. Is the iShares core equity? Is it like an ETF of ETFs basically? I think that was like the Horizon one was. So lots of diversification in there. And that's kind of what a lot of the Wealthsimple Invest side is. Some of them are like they're all ETFs. So Vanguard, VEQT, and XEQ. Okay, and they're popular, right? Good. I like that. There's so many ETFs. We've talked about it before. So many. You can go crazy looking at all the different ETFs. I just have picked the two that kind of jumped out at me. Had the holdings that I kind of liked. Vanguard's popular, and it's like, okay, that's what I'll start with, and that's kind of where I've gone. I don't really have any desire to. It's been fine, switch it up or anything like that. I'm not here to chase something different, but it seems to work for me. Yeah. There we go. 12 people watching today. I think it's awesome because each day is more and more people joining in and coming on to the conversation, which is awesome. So to the 12 or so people that are popped in and watching, welcome. Thank you for joining. Again, we always kind of do this halfway through. If you haven't hit the like button, it sounds like such a shill to like and subscribe, but it's always appreciated. It definitely helps out the channel. We're getting there. We're growing. We're having a good group of people, and I think these live streams are kind of fun because I get to kind of learn about different how other people invest, some of the things that they're doing, some of the struggles everybody has, and we can kind of stick together as a community. Because I think we'll be celebrating more in the future as after we get through the this time, right, in the market. And no, I haven't. So VFE, yeah, because there's the hedged ones, but I mean, some people have mentioned that, but I don't know. I think this is the thing, over the next 10 or 15, like I'm not selling it, right? So probably over the next 10 or 15 years, I just kind of think everything will kind of even itself out. Maybe that's not the right way to look at it, but that's kind of how I've kind of looked at it and go, okay, there's, the time seems to have a great equalizer on a lot of things. So I think that's kind of where I'm considering, not really necessarily worried about that so much in the ETF. And then, yeah, I think if you look actually, MC, at the hedged ones, sometimes I think over the long term, there's not that much difference in if you're looking at what the returns are. I could dig more into it and take another look again, but I think a lot of times if you look at it, it's kind of like, for a long term, it's like, 6 one half dozen of the other. It all kind of evens itself out. That's kind of how I quickly, when I looked at it, kind of thought, okay, this makes sense for me, instead of trying to instead of moving stuff around, my tactical approach. Yeah. I'm just, that's a good question too. Yeah. I'm definitely like a calm, if you're watching the channel, I'm a very calm investor. I don't panic at volatility. I don't put all my eggs in one basket. And it's kind of, it's definitely, this investment that I share, the TFSA, it's such a long-term investment that this short, it seems like a long-term volatility we're in, but it's basically going to be a blip in the next 15 years, I think. So it doesn't stress me out. And I just kind of do I'm a slow and steady investor on that. And I don't for me, I don't think I'm overly risk. I mean, I think I'm probably more risk tolerant than maybe a lot of other people, especially if with the digital assets. Some people don't touch that at all. Um, but I'm definitely, it's not something that I volatility and risk doesn't, because it's also this, don't forget, is this TFSA isn't my only investment either. So if there's certain things that I can take a bit more risk on, it's also just it's not it's not my whole investment portfolio. I'm definitely, I think, and again, I think I said it. I'm obviously on the invest side. I don't have a lot of. It's mostly equities as well, but I take definitely more of a like the approach on that is probably less risk, like less I think less risky than my TFSA. But that's kind of done. That's managed, like, even though it's like MC, even though it's done, by it's the robots, right, or robo advisors. I think they probably do it better, and the portfolio has been performing better in the short term on the invest side than on my TFSA side, and that's because of some of the riskier stuff that I do have and have got into and learned from, right? Like obviously some of the the small caps that I purchased haven't done well, but we've talked about it before. It's like it's a learning experience. It's taking that risk, learning from mistakes, and moving forward from it. So, and then learning in terms of tactical approach would be learning over the past year and a bit to focus on. We'll go back to your core and explorer. Like I just kind of transitioned into that in the last year, just with the way the market and everything's been doing is building more of those two in that portfolio. And in terms of thinking more long term as well, for more risky, is the Bitcoin as well. And everybody kind of knows, I think, on the channel that I also own like actual Bitcoins. Not Bitcoins, but investment in Bitcoin. I wish I owned coins, but I do not. So there we go. Hopefully that answers your question, MC. Always long-winded and rambly when I start to get going on. But those are great questions and comments. And I guess I always like to mention if we've seen Candace or not yet. And so Candace, if she's not in the stream, we always know she's making money on day trading, because if she jumps on the stream, I think I figured it out. Candace, if you're watching on the replay, is if you join the live stream, you've either made your day trading money for the day, or you've cut your losses and you're out for the day. That's my theory. So she'll maybe catch that on the replay. In terms of coming forward with Candace, we're still planning, and everybody I think that follows this channel hopefully follows Mountain Finance Candace on her channel. She goes a lot more technical into details and stuff like that with individual stocks and investments, that kind of thing. So check her channel out if you haven't already. But we are planning to do a joint live stream. We're still working on we have to work out the details. We have to get our schedules together because we're in different time zones. Obviously, she's, I think, in Ottawa. I'm in the West Coast, so we have to work out a time that will work. It'll be at a different time, because and Candace also does her live streams. So we're going to kind of talk about our YouTube channels and how we got started, and because we kind of both hit the 1,000 subscribers right around the same time. Candace did, I think it was a couple days ahead of me. So we had a little bit of banter going forward. So we're going to be talking about kind of how we started with our YouTube, because the whole goal with this channel, I can maybe speak for Candace a little bit now, but the whole goal was to kind of, build this channel up, build a community. But then you also, obviously, if there's advertising and stuff coming in, this channel, I'm not monetized on this channel yet, but to start to use that as a bit of extra income to put into investments, and just a bit of extra work into, and to show the investment in building on the channel. And just kind of, I know there's some other people that do follow, can sometimes jump into the live streams and comments that have their own their own channels as well. So the idea was to get on there and maybe help them and give them some tips with the certain things we use for, for editing, for ideas, and learning the whole YouTube thing. So I think that will be a lot of fun. We're planning that. It'd be nice to hopefully we get that done before. It won't be before the end of October, I don't think. We have to just kind of iron out a time still when we'll be doing the that video. So I'm really looking forward to that. That should be fun. I always like to talk YouTube, which is always fun for people. So this time always goes so fast. It's almost 9 o'clock. So it's great. We always have a lot of fun, and you start going and you start off and talk about one thing, and it always goes into another. It always goes into another direction from that. So I really that's what's always fun. And you always kind of learn new things along the way. Let's check out how the market is doing before we end here for the day. S&P, let's pull it up. We are doing okay today. Everything, just looking through my portfolio, everything is doing okay. It's kind of nice. It's kind of nice to see, especially when we've had such a ugly time for a while. And back on my conversation when I got sidetracked. It's okay to get sidetracked, MC, with your questions, but I was talking about obviously what's upcoming. So tomorrow is Wednesday, and that is the Bank of Canada rate announcement day. So it's a good bet that obviously rates are going to increase. I don't think that's going to be a surprise for anybody. I don't know if anybody has any predictions for how much they are going to raise the rates. You can let me know in the comments if you think. I'm leaning towards like 0.75, so 75 basis points. I don't think we'll see the big 1% this time. Hopefully not. I think it's either going to be 75, probably 75. That's what I'm going to go with. I'll put a poll on my community tab as well to kind of see what people think. Some people are maybe saying 0.5%, but I'm leaning towards 75. So that means obviously, so Nadia's watching 50, hopefully only 50. We can hope and cross our fingers. You know what? I think a lot of people would hope it would only be 50. Just personally, I think it's going to be 75. That's just me. We'll see. We'll know tomorrow. We'll be able to talk about it on the stream tomorrow. We will be having, like we have our streams. It's every Monday to Friday, 8 a.m. to 9 a.m. Pacific time on the West Coast here. We'll be able to talk about that. So I'll get that scheduled later today. I think it gets announced at, I forget what time it's at. I think it works out to be 7 a.m. my time. Is it 10? I think it's 10 a.m. in Ontario. So we'll know obviously before the live stream starts, so we can always have that conversation to see what happens. And of course, the rates going up isn't great news. Well, hopefully it's good news because it will bring inflation down. It's going slower than I think they want it to come down, but it's bad news if you have a variable rate loan on something, mortgage or line of credit, or looking to get a new loan going forward, right? Car loan, something like that. Obviously, it's going to be more expensive. But on the flip side, we should hopefully see. We never see the savings account. I mean, they're always quick to take, and they're never quick to give. The savings accounts, I mean, hopefully will be increasing a little bit. You would think. There's lots of promos out there. I know. I see that when I pop into my banking. If you put in an extra amount this month over your last month or something, if the balance keeps growing, they give you the bonus interest, that kind of thing. So there's lots of those deals out there. It would be nice if it was just, here's your interest, and keep your money in the bank with us. We'll give you this much, instead of having to try and, because I know there is people that chase around the bonus things. But it would be nice to see. Maybe I know Wealthsimple has their save section, and I think it's 1.5% right now, if I'm not mistaken. So that'd be nice if we can maybe see that go up a little bit. That'd be good if they can negotiate that somehow. That would be good. That's the good thing about rates increasing. I mean, I guess it's got to look on the bright side, I guess. But and good morning. Thanks for popping in. We're here for about another 10 minutes, Train. It's great to have you. Hit the like. Thanks for joining. If you have a question, we've been talking about all sorts of things today. Make sure you go back later on. Check out the live chat. There's some great suggestions from some ETFs. MC did some suggestions on ETF, and yeah, no, it's been good. We were also talking about Canadians taking out $9 billion in September of their investments out of their mutual funds, which was quite a withdrawal. So hopefully you have been able to keep investing as opposed to needing to take out investments at a loss. It's never fun to take out something at a loss if you need to. That's for sure. That's where it hurts. It's one thing to see it. It's one thing to see it in, a loss on paper. But obviously it's not a loss until you sell, have to take it and sell it for a reason that is unfortunate. This would even hurt even more, I think. I'm okay kind of looking at something and seeing that it's down for the time being, because I'm thankfully not having to pull that out. But it would definitely hurt more if you're looking at it going like, oh, I got to withdraw. I'm done. I have a bill. I have to pay this. I need to withdraw this at a loss. And it's something that I think will go up in the next few years, but I really need this money. It's very hard. And that's when they get locked in, unfortunately. But good morning on that note. And we always can tell when we're at closing to the end of the stream, because it takes me about an hour to finish my coffee. And it's always cold by the end, at the very bottom. I need to get a thermos or something so it stays hot. Hopefully you drink your coffee faster than me. I get sidetracked talking, and my coffee gets cold. So if there's any last questions, do let me know. We'll do a quick recap on the channel. I will film a update because I did do that deposit today on BTC.Y. I'll post that over on my community tab. So I have to do an update. Portfolio is looking okay. So it's always more fun to do an update when it's starting to grow a bit on the green side. See how we're doing. And that was kind of that's all I had planned for today. Thanks so much for that's joining. So if there's any last minute few questions, if people are jumping in, I know we've got a few people kind of coming in. Always come in at the end. Hit the like, ask a question. It'd be great to have you join in as we kind of wrap things up. We can always check and see market is still doing good today. It's nice. It's nice when we have days like today. It just makes what it makes is kind of, it makes those ugly days start to look a little bit brighter, and we kind of hopefully, even if it's short lived, we see a light at the end of the tunnel of getting through this volatile time. I think we're still in it for a while, but it's nice to have these little bits of. I don't think I'm not getting overly, putting. I don't have, you don't have a tons of cash to put into investments because you think it's always going to turn around. But I think there's a lot of people that do have sitting on the sidelines. So hopefully when we see that, if we're the ones that sticking through the slow and steady, we'll see that improve in the future. And I think back to rates, rates going up. Hopefully this is kind of the last larger size one. Whether you think it's 50, like Nadia said, 50 basis points, or I'm thinking 75. I don't think it's going to be one, but hopefully this is kind of the last biggish one, and we'll have a bit of a kind of let it kind of work its way through, so we can have a bit of hopefully clarity going forward to see what's going to happen. It's obviously going to depend a lot on what happens in the States as well, with what the Fed is doing. But Canada is just kind of on the sidelines a little bit. It's still important, but everything revolves around the States, that's for sure. But we'll see, because obviously the rates impact us, Canadian rates, right? But the States impacts everybody. So we'll see what happens. So tomorrow there will be a live stream, 8 o'clock, and thanks so much for everybody that's watching, for sticking it out. It's always fun to do these. I appreciate everybody spending their morning jumping on, spending the hour with me. And also too, if you're just watching this on the replay, I appreciate it as well. Every view is a view, and it's great to have you join along. So on that note, it's almost 9 o'clock. We'll end it right about now. Thanks for joining, everybody. Have a great rest of the day. If you are making any purchases today, hopefully everything kind of keeps going up, 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 up. That's all we can hope for. And yeah, thanks, Nadia. We'll end at that. Have a great day. Thanks.